Hi students, I am Dr. V.K. Sawant. We are discussing accounting for liquidation of companies. In previous lecture, I discussed various important points about the liquidation of the companies. Presently, we concerned with some important points which are very essential as theoretical background of the chapter. There are certain points which are very essential for preparing liquidator's final statement of account. A liquidator is a person who entrusted with the work of liquidation of a company. When liquidator is appointed, all the powers of board of directors are transferred to the liquidator. Now we are focusing liquidator's remuneration. A liquidator gets his remuneration in the form of commission for doing liquidation work. Liquidator gets remuneration called as commission. There are three types of commission, or there are three types of remuneration. One is fixed remuneration, another is commission based on realization of assets, and third one commission based on payment to unsecured creditors or shareholders. These three types of commission is elaborated as under. Firstly, we are looking first type of commission, that is fixed commission. Name itself suggests that the commission is fixed. In this case, fixed amount is paid to liquidator as remuneration or commission for his work. For example, 50,000 paid fixed commission to the liquidator for entire work of a company liquidation. Under this type, no need arises to calculate liquidator's remuneration separately. It is provided in the problem. It means that fixed commission is the fixed amount given to the liquidator for the work done by him regarding liquidation of the company. Another type, commission based on realization of assets. At the time of liquidation, all affairs transferred or, or concerned with the liquidator. It is the duty of a liquidator to sell assets of liquidated company in the open market and wait for getting good price to the asset. When a liquidator is entitled to receive a commission on the basis of asset realized, the amount of asset realized is taken into account, excluding. While considering asset realized, the following points should not be taken into account. These are the three important points: cash and bank balance. when it is recorded separately. Calls in arrears recovered. Calls on partly paid shares received. It means that while considering asset realized by the liquidator, these three items are not taken into consideration in asset realized. These three items are cash and bank balance, calls in arrears recovered, calls on partly paid shares received. But surplus handed over to liquidator is to be considered in the amount of asset realized. However, if such asset is realized by the liquidator and not by the creditor, then full amount is taken into consideration for the purpose of remuneration. It means that here two ways are there. One is if asset is sold by creditor himself and the surplus amount handed over by the creditor to the liquidator is taken into consideration in asset realized. On the contrary, if the assets realized by liquidator, then full amount of assets sold is taken into consideration in asset realized, and considering that amount, the remuneration will be calculated. When a particular instruction is given regarding inclusion of cash and bank balance, that time, as per the instruction, the amount of cash and bank balance is included in the amount of asset realized. If, if specific instruction given in the problem and that instruction indicates take into consideration cash and bank balance in asset realizer, in that case, the cash and bank balance is taken under asset realizer and it should be the base of remuneration calculation. For example, suppose asset realized by the liquidator are of rupees 5 lakh and liquidator's remuneration is agreed at 5% on asset realized. In this case, the amount of liquidator's remuneration or commission is rupees 25,000, that is 5% of rupees 5 lakh. It means 5% of asset realized amount came rupees 25,000. Third type of commission, that is commission based on payment made to unsecured creditors or shareholders. We know that creditors are classified into three categories: secured preferential creditors, number one; number two, secured creditors; and number three, unsecured creditors. Generally, unsecured creditors include preferential creditors. While making payment to unsecured creditors, and when that is the base of remuneration, for that purpose, we are considering commission based on payment to unsecured creditors. Unsecured creditors. Commission on the basis of payment made to unsecured creditors is to be calculated by taking into account total amount of sundry creditors, bills payable, bank overdraft, outstanding expenses, part of secured creditors which is not being paid, and preferential creditors. Such commission is payable to the liquidator. The amount of remuneration is calculated at a certain percentage on the amount distributed to unsecured creditors. Preferential creditors are unsecured creditors, so the commission is given Also on the amount paid to preferential creditors. If the specific instruction is given to exclude preferential creditors, then payment made to them is taken into account while calculating is not taken into account while calculating remuneration. When the remuneration or commission is calculated on the payment made to unsecured creditors, in that case, we are considering the total amount of unsecured creditors. Unsecured creditors include sundry creditors or trade creditors, bills payable, bank overdraft, outstanding expenses, part of secured creditors not paid. Total of all these items is termed as the amount of unsecured creditors. So percentage is given of commission, then that percentage and the total amount of unsecured creditors is taken into account and commission is calculated on the basis of payment made to unsecured creditors. But it is noted that preferential creditors are also unsecured creditors. That's why the amount of preferential creditors is also taken into consideration while calculating remuneration on the basis of payment made to unsecured creditors. But in the problem, if specific instruction given regarding unsecured creditors does not include preferential creditors or calculate commission to unsecured to liquidator on the basis of payment to unsecured creditors excluding preferential creditors. In that case, we are not considering preferential creditors for calculation of remuneration or commission payable to the liquidator. It means that these are the three types of commission. But further, we are considering while making the payment to unsecured creditor whether we have sufficient cash balance or not. Suppose cash is sufficient. In that case, liquidators remuneration is fixed at 2% on amount paid to unsecured creditors. So here liquidators remuneration is calculated as usual as 100 as to 2. It means that if the cash is sufficient, calculate commission as usual. It means that consider suppose the rate of commission is 5%, then consider 100 as to 5. If the rate of commission is 2, consider 100 as to 2. On the contrary, when cash is not sufficient, suppose liquidators remuneration is fixed at 2% on amount paid to unsecured creditors. In this case, liquidators remuneration is calculated as 102 as to 2. It means that if the cash is not sufficient to pay full amount of unsecured creditors under that circumstances, while calculating amount of remuneration, consider base. The rate of commission is added in 100. Suppose rate of commission is 2. So 100 plus 2 is equal to 102. That is the base. So commission will be calculated as 102 as to 2. Another example. Suppose rate of remuneration is 5% and cash is not sufficient. So base Firstly, consider 100, then add it rate of commission 5, it makes 105. So base base of commission calculation is 105 as to 5. After calculating the amount of commission, it is deducted from the cash available and the remaining amount is paid to unsecured creditors. Suppose cash available is 10,000. Liquidation remuneration calculated is rupees 500. 10,000 minus 500 is equal to 9,500. It means that total cash available 10,000, amount of commission 500. So net amount paid to unsecured creditors is 9,500. Another example, liquidators remuneration on the basis of payment made to equity shareholders. The procedure of calculating the commission based on payment made to equity shareholders is similar to the procedure of calculating the commission based on payment made to unsecured creditors. It means that there are three types of commission or remuneration. A short note may be asked on liquidators remuneration, or multiple choice question may be asked as under how many types of commission given to the liquidator. There are four alternatives through 2, 3, 4, 5. Correct answer is 3. Also, suppose cash is not sufficient and rate of commission is 5%, then commission will be calculated as 100 as to 5, 105 as to 5, 95 as to 5. So correct answer is 105 as to 5. Then new part, new note, liquidation expenses. Liquidation expenses are the expenses which are incurred for the liquidation of the company. Liquidation expenses include establishment charges and other expenses of liquidation, such as auctioneers and valuers charges, cost of possession, maintenance of property, cost of notices, etc. All liquidation expenses are to be paid in due order. Liquidation expenses are recorded as payment on payment side in the liquidator's final statement of account. It came after liquidator's remuneration. Liquidation expenses, it is also known as cost of winding up. It includes establishment charges and other expenses like auctioneers charges, valuers charges, cost of possession and maintenance of the property, and cost of notices, etc. Another important note or point of our discussion is preferential creditors. We know that there are three types of creditors: preferential creditors, secured creditors, unsecured creditors. While making payment, first priority is given to preferential creditors. A preferred creditor, also known as preferential creditor, is an individual or organization that has the priority in being paid the money it is owed if the debtor declares bankruptcy. As per the Section 326 of the Companies Act 2013, following are the preferential creditors. All revenues, taxes, cesses, and rates due from the company to the central government or a state government or to a local authority at the relevant date and having become due any payable within the 12 months immediately before that date. Preferential creditors are the creditors which have priority regarding payment. Generally, all government dues, government means central government, state government, local authority, all dues of them are treated as preferential creditors. All wages or salary, including wages payable for time or piece work, all wages and salaries of services rendered to the company and due for a period not exceeding 4 months within the 12 months immediately before the relevant date, subject to the condition that the amount payable under this clause to any workman shall not exceed such amount as may be notifies. It means that wages and salaries payable to employee are considered as preferential creditors. All accrued holiday remuneration becoming payable to any employee or in the case of his death to any other person claiming under him on the termination of his employment before or by winding up order or as the case may be the dissolution of the company. It means that all accrued holiday remuneration payable to employees considered as preferential creditors. Compensation payable under compensation payable under Workmen's Compensation Act 1923. It means that compensation payable to employees treated as preferential creditors. All sums due to an employee from the Provident Fund, the Pension Fund, the Gratuity Fund, or any other fund for the welfare of the employees maintained by the company. Amount of Provident Fund, Pension Fund, Gratuity Fund payable to employees treated as preferential creditors. And last, investigation expenses. It means that we explained these expenses or items of expenses which have priority about the payment. Suppose cash is not sufficient to pay the full amount of preferential creditors, then the cash available is paid proportionately to all of them. That is very important. It means that priority items are preferential creditors, but the amount is not sufficient to pay preferential creditors, then it is necessary to calculate proportionate proportional propor- proportionate or ratio of amount due, and that is compared with available cash, and that on the basis of proportion the payment is to be done to the all involved items. Next, new point of discussion is unsecured creditors. The creditors without any security are called as unsecured creditors. Unsecured creditors are the creditors without any security. It includes sundry creditors, bills payable, bank overdraft, outstanding expenses, loans, unsecured portion of partly secured creditors, etc. They are paid in full before the payment to preferential holders if sufficient cash is available. It means that if the sufficient cash is available, firstly payment is made to preferential holders. Sorry, if the cash is sufficient, firstly payment is made to unsecured creditors, and then the payment is to be made to preferential holders. It means that unsecured creditors have a right over the preferential holders, and unsecured creditors is unsecured creditors are paid proportionately if cash is not sufficient. New part of discussion: preferential dividend. No dividend is payable for the period following after commencement of winding up. That is very important. It means that dividend is paid up to the date of winding up. After the declaration of winding up, no dividend will be paid after the commencement of winding up. It means arrears of dividend up to the date of commencement of winding up only to be considered. If dividend was declared but not paid, it is it is to be paid as a debt of the company and not as arrears, and it is paid in priority of return even preferential capital. If dividend is arrears and has not been declared, it is paid only if there remains any surplus after repayment of equity share capital in full. These are the important points as related to preferential dividend. If dividend is arrears and has not been declared, it is paid only if there remains any surplus after the payment of equity share capital in full. However, if the articles state that arrears of dividend on preference shares are to be paid before anything is paid to equity shareholders, that is very important. As per the articles, no claim given to equity shareholders regarding payment. It means that after making payment to preference shareholders, including dividend, then the amount will be paid to equity shareholders. The payment of dividend is to be made accordingly. In this case, it is felt necessary the required amount is collected by making a call on partly paid shares if any. If required additional money for making payment, For arrears of preference dividend, a, a call is to be made on partly paid shares if required. Then, preference share holders. Preference shares are deemed to be cumulative, non-participating, and having preference for payment of dividend and repayment of capital over equity shares. So, after payment of all outsiders, the remaining amount is used to pay first the preferential capital as well as dividend payable to them. It means that after making payment to all outsiders, the remaining amount is firstly paid to preferential holders, including capital and dividend. Calls in advance. Next part or point of our discussion, calls in advance. If there is a call in advance on any class of shares, such advance amount is to be paid first to the shareholders. If any interest is payable on calls in advance, it is treated as unsecured creditors. It means that interest amount on calls in advance is treated as unsecured creditors, and it is interest on calls in advance considered under unsecured creditors. Before making payment to shareholders, firstly payment regarding calls in advance is made. And last part of this presentation is equity shareholders. The cash remaining after paying all external liabilities as well as preferential capital with dividend in arrears should be paid to equity shareholders. But if the preference shares are participating, then cash remained after repayment of equity share capital should be distributed among equity and preferential holders as per the articles of the company. It means that the last number of payment come to equity shareholders. So equity shareholders get their capital amount if cash is available. If cash is not available, the claim of equity shareholders cannot be fulfilled. In this way, I am concluding my speech here. Thank you.